Hello and welcome to CNBC Africa's budget coverage. Now, it's been called the most important medium-term budget policy statement in the history of democratic South Africa. Hi, I'm Chris Bishop, the editor of CNBC Africa, and we'll be covering every word of this vital economic address live throughout the day. Now, decisions about our economic future that we made against the backdrop of record unemployment figures out this week, power cuts, and the threat of a downgrade by Moody's later this week. Growth is becoming more elusive than ever. The economy shrank unexpectedly by 3.1% in the first quarter of this year. GDP growth for 2019 is expected to come in at a mere 0.6%. We'll be looking into all of these issues with our esteemed panel here. But first, let's have a look into Finance Minister Tito Mboweni, who's a very thin line to walk in this medium-term budget. Before we get into this discussion, let's take a look at some of the problems he faces in this report filed by CNBC Africa's Kapana Gumbi.
All eyes will be on South Africa's Minister of Finance, Tito Mboweni, as he presents the country's medium-term budget statement. The statement sets out the government's financial priorities for the next 3 years. At the top of the agenda is how the government plans to fund ailing state-owned entities like Eskom, national carrier SAA, and soon-to-be set-up national health insurance. Minister Mboweni shared these challenges in Parliament earlier this month.
The Minister of Finance is burdened with having to find resources for Eskom, for South African Airways, South African Express, Dinel, Alexco, and then a huge bill for the compensation of employees, many programs that must be funded amidst an aging and overburdened infrastructure. Within the context of declining tax revenues due to low economic growth.
And that will mean trade-offs. The government has committed in the next 3 to 5 years to give Eskom an additional 230 billion rand. SAA is in need of 21 billion rand, and national health insurance is estimated to require an additional 165 billion by 2026. Lumkile Moody, senior lecturer at the School of Economic and Business Sciences at the University of the Witwatersrand, says the country is in crisis and that the impact on our economy is a consequence of poor decision-making in the past.
Well, in fact, whether it's Eskom, whether it's NHI, these are all ambitious, unsustainable programs until we focus on what these institutions are about. Remember, Eskom was about the lowest cost possible and about energy security. And it's been raided by comrades and private sector sharks milking the company all the way. So we have to ask ourselves, what can we do to ensure that there is energy security? So Minister Mantashe presented the RP 2019, and it seems to me that still we're not there yet. I think if the minister does not get support, it may as well be a situation whereby South Africa is forced to look at low-cost options, including privatization. So this is an opportunity really for people to rally around the Minister of Finance, failing which if they don't, they'll face the consequences of really a declining economy, worsening unemployment, poverty and inequality, and a slow death towards destroying what South Africa has. So we need to rescue it, and I'm hoping that Minister will repeat that message of a rescue plan, ensuring that we can start rebuilding what the ANC in the past 25 years has destroyed purposefully to create opportunities for patronage, for a network that's maximizing individual interest and those in the ANC that are in power at the expense of the majority whose lives have not changed despite 25 years of ANC governance.
But we are bleeding money in that time.
We're bleeding money because if you use race policies, in the South African government has done, we all know that apartheid regime use race policies to exclude the majority of South Africans, and the ANC has done the same. So those policies are never going to sustainable, you're never going to grow, you're never going to address inequality or poverty. We need to look at creating opportunities. So if no one sees it, we're going to pay. And we're paying now, and it's not going to pay big. So policy shift have to happen. We have to look at using all the resources available, meaning get rid of these race policies, focus on capability, focus on fixers, and get us going, and creating opportunities for the underclass, the marginalized, and the poor.
In South Africa, which is termed a developmental state, the state is the enabler. They have to participate, they have to put in the funding in order to grow, to invest. They have to invest.
Yes.
Now, if we are investing 230 billion in Eskom, for example, what is the cost?
The cost is enormous. The costs are all the opportunity costs that the NC continues to incur to society. So your unemployment continues, the marginalization of black people continues, inequality widens because we're failing to make the right choices. The right choices are very, very clear to many South Africans, that we have to bring competition in the energy space and rely on private sector players to come in and lower the cost of generation and the cost of energy supply and provide energy security. But more importantly, it requires leadership that understand what its mandate is. Our mandate, our constitution is very, very clear. South Africa belongs to all who live in it. And as a cornerstone of redress is about equality. That burden of creating equality rests amongst all of us. It can't be a white problem. It can't be a black problem. It's South Africa's people problem. Therefore, as we need to create wealth, we need a growing economy. As it grows, we can then redress. These policies that are racial favor us who have access to education, who have material, at a huge expense for the majority, whose plight continues to worsen. Every day, these racial policies stay. We are closing opportunities for these people. We're not creating opportunities, but my child and many other South Africans, elite children, have got better opportunities, whilst we leave the rest behind.
If, like Lumkile Mondi believes, the minister can convince his colleagues to exercise financial prudence, South Africa's economy could recover. Kopano Gumbi, CNBC Africa, Johannesburg.
We'll be linking live to the Finance Minister's speech later in the show. But for now, let's have a look at what's likely to come up. We've got an esteemed panel here. We've got Tendani Manchimuli, an economist at Liberty. We've got Annabelle Bishop, a chief economist at Investec. And from Business Leadership South Africa, fresh from Parliament, is CEO Busi Mavuso. So Busi, you were down in Cape Town amongst the powerful. Could you just give us an idea of what you're feeling, what we're going to get in this budget?
So actually, I was there yesterday. So that was a discussion of the Eskom board with a standing committee on appropriations. And I think from a business perspective, what we'd like to see on the budget, let me first and foremost say that it is good that the Eskom paper has come out, because I think from a policy certainty perspective, it therefore seeks to give, that certainty and that direction in terms of what it is that we intend to do with Eskom. Because I think the biggest fear of business, and biggest discomfort of business at the moment, both local and international, is precisely what our plan is around Eskom. So we're hoping that the numbers to support that Eskom paper that came out yesterday, today from Finance Minister Mboweni are therefore going to, speak to that. But I think the big elephant around the room, in as far as the SOEs broadly, is precisely, the money that we keep on putting into these SOEs, which have got no, determinable, ROI, and I think the huge, feeling and consensus is that we seem to be throwing money down the drain, and we're therefore saying, is our fiscus in a position to actually, be able to contain these bailouts that we actually continue to give to these SOEs? Should we not be thinking otherwise? Are all 700 of them strategic? Should we not be deciding which ones are strategic and which ones are not? And those that are not, let's get rid of them or bring in strategic equity partners, because it's no use, that we as the South African government continue to behave as if we've got deep pockets, because we know we don't. And as you give this money to these SOEs, what are the opportunity costs, in a country whose economy is near collapse? And I think those are the trade-offs that we'd like to see come out, in the budget speech today from
So Annabelle, this is a big thing. This week we had the plan from Pravin Gordhan about what he's going to do with Eskom. I've read it. It's fairly ambitious. It seems to me he's got his work cut out. But this SOE thing, do you think we're going to get any sight that we're pouring good money after bad into the state-owned enterprises?
Look, I think, that does seem to be the feeling. If you look at the Eskom debt, it's at 440 billion. 300 of that, around about 300 of that, is guaranteed by government. And the credit rating agencies, Moody is now pushing that onto government's balance sheet for an assessment basis to see, what our rating should be. So essentially, that the great concern is this 440 billion of Eskom, 15% of GDP. The worry really is, why do we keep putting money into the entity? Why don't we use some of this money to actually buy back debt so we can reduce this quantum of debt? Because if Eskom actually fails, it's not just about, losing the electricity supply, and it's not just about the government guarantees. It actually will permeate business sentiment right through the entire economy at a time when business sentiment's actually at historical lows compared to the last financial crisis. So we're actually in a crisis situation. We're not taking really radical action. It feels to me like we're papering over the cracks. Why can't we use some of this money to reduce that 440 billion? And we need to be more creative. We need to actually look at a special purpose vehicle. We need to look at some type of debt equity swap. And in particular, actually we're looking obviously at divesting non-core assets for Eskom. That's part of the plan. But looking at actually some private asset stakes, privatization. This situation is only going to get worse. It's not going to get better from the point of view that if your economy doesn't grow, government debt will escalate in size as a percentage of GDP. So too for Eskom. If it doesn't actually grow and get more revenue, it's not going to dig itself out of the hole.
So, Tendani, if I could put it to you, I was speaking yesterday to a very high-profile former head of one of South Africa's big institutions, and we were talking about SAA. And I said, what would you do? He said, no, it's simple. He said, just sell half of it off, bring a private company in, lease the planes out, cut the staff. But is it going to be that simple?
I think because we tend to not look at economic facts as they are and take decisions based on that, you have to appease the population, you have to appease the partners that the ANC has. And I think that is a problem with this government, because while the president set out plans that were ambitious and you could say achievable, he hasn't been able to implement any of those. And that's my fear with the Eskom paper that came out yesterday, that they're going to start spinning out the entities and these are the plans. Whether or not that comes to pass is a different story. And I think that is where business confidence is starting to tank, because while there was euphoria to say these are the plans that are going to be executed, it hasn't happened yet. So as far as saying SAA will be sold, if you had a penny for every time that somebody said that over the past few years, you would be able to weather the current financial crisis. Much
bail
better.
Out SAA at the same time. Yeah?
Bail out SAA at the same time. I do think that it doesn't make sense for us to continue pouring good money after bad. My worry is that if these SOEs do not perform, and we've been pouring money into them without, as Vusi said earlier, actually requiring what is the rate of return that we're getting from that. You've seen a huge quantum of increases in NERSA funding Eskom. Supposedly, you would have thought if the only thing that was the problem with Eskom was that they're not getting enough payment for, increases in electricity prices, it would be sufficient. But we haven't seen that this money has actually been used to this, and I'm afraid that the SAA sale might remain just that. So the minister did mention that, but it hasn't happened.
Well, the minister has said in the past that these things should be sold off. But on the other hand, from a practical business point of view, Vusi, I could ask you, who's going to have the cash to pay? In this country, a lot of companies are struggling with cash flow. Secondly, to foreign investors, you say to them, listen, we've got a bunch of loss-making old ramshackle companies, do you want to buy them? Probably the answer might be no. Who would want to buy them?
Yeah, absolutely. And I think the key issue that we're facing as an economy is that of restoring confidence. So you're seeing investment that is either being delayed or cancelled, because, confidence levels are not where they were, I think, as alluded earlier, they're at a 20-year low, and I think we have seen the ease of doing business index, we have slipped from, position 82 to position 84 when we had actually said we want to be at position 50. So we're probably going to have to think carefully around what we mean by trying to position ourselves as an investment destination. What are those decisions that we're actually going to to have to take, because I think investors will respond to that, you know, and I think kicking this can down the road and dilly-dallying on some of those decisions is actually not going to help us. So if, for instance, we're mooting policies such as the prescribed assets, it doesn't augur well for investors. If you're mooting, you know, issues around the independence of the Reserve Bank, if you're not sorting out the visa skills issue, you know, if you're not being clear again around the ESCOM issue that we're talking about, providing energy security, you know, you can't expect people to come into a country when you're going to be having 16 to 18 hours of load shedding per day. It just cannot be. So I guess the positioning, therefore, you know, budget speech, SONA speech, whatever platforms that we have from a government perspective, it's going to have to be in alignment with that, you know, but we seem to be doing things that are actually, you know, that don't have that in mind, you know, as if we've forgotten that we've set ourselves on a path and on a trajectory to bring in 1.2 trillion rands into the country in an investment, you know, target, as it were. We're going to an investment summit in a few days, you know, how is that going to augur? You know, how is that going to, who is actually going to be putting their hand up to say that I'd like to invest in this country? And when they do invest in this country, you know, what does that mean for them? You know, you saw the unemployment rate shoot up to 29.1, an 11-year low, you know, yesterday. You know, those are all the factors that we're actually going to have to be grappling with, you know. And I'm hoping today that we don't give more money to social grants, because as much as probably a lot of people need it, but this is a serious balancing act, because the reality is that we don't have a pot of money, you know, that is deep enough. So how do we therefore strategically spend the money that we have as a country, you know, to ensure that we do what we need to do? We have yet again once this year, you know, missed our tax revenue target 6 years in a row. You know, that's problematic, because it means that a budget deficit, you know, just becomes higher, you know, from a government coffers perspective. So I think those are all the issues that investors and credit rating agencies would like to see come out.
And I'm saying it's missing by a mile, even though there is new leadership in SARS. 37%, was it not, for this year? But also, talking about social spending and grants, I mean, already I was hearing on the radio news stories about people complaining in advance about services that are likely to be cut in these difficult times. How much of a juggling act is that going to be for Tito Mboweni, bearing in mind there are a lot of people reliant on grants? I was reading somewhere that is it 3% growth is needed to support the social grant system, and we're way off that. How's he going to do it?
Well, I think, you know, we should actually have a look at what we were doing 10 years ago at the end of Thabo Mbeki's reign. You know, 10 years ago, the formal unemployment rate was at 21%, but the expanded unemployment rate was actually at 29%. Now our formal unemployment rate is at 29%. Our expanded is close to 40%. And that means that there are more people who need social assistance, social welfare, besides the growth of the population, right? You know, the point is you can't cut them off. And, you know, I don't think we want to reduce their benefits either. But the problem is we could have given them so much more, and there could have been seen so many that were included in the economy if we had not had this last decade, as Sir Ramaphosa calls it. So, you know, to really answer your question, you know, this is probably one of the most difficult budgets yet, because one of the things that needs to happen is we're talking about current expenditure now, social grants. There's also the other side of it, which is obviously civil servant salaries and wages. And again, you know, not cutting the people that we need, and certainly not the low income earners in the police, the teachers areas, but rather looking at the higher echelons of government. You know, salary freezes there, but certainly freezing of hiring as well. I mean, issues again at ESCOM. The big thing for us is looking on the other side of the fence. What is actually happening to promote economic growth in South Africa? And if we have a look at fixed investment from government, you know, you see monies there unspent, underspent every year, pushing forward that expenditure and getting those schools, clinics built. They don't need to be built by large construction companies, but just affecting that type of economic growth, that employment, that job creation through actually affecting this fixed expenditure will help on the growth side. I mean, the bottom line is our GDP growth is so low that in the absence of it rising to about 2.5%, this debt to GDP ratio, which is climbing towards 60, is actually going to continue climbing. And it's not just about losing the Moody's credit rating, it's about continuing to lose credit ratings and actually falling into a proper junk status towards that Greece has. When you're in that environment, you can't pay teachers' salaries and you can't pay social welfare.
Where can Mboweni cut back? I mean, what should it be? Should it be the army? I don't know. Should it be? What should it be?
Let's put a moratorium on the public wage bill, for instance. You know, we'll put a moratorium on bringing people in, but don't give, you know, civil servants any increases. You know, I know it's a bittersweet be a pill to swallow, but would you rather have them unemployed, or would you rather them have a salary that actually hasn't increased? And same goes for SOEs, and I think that is the reality, because then it doesn't have much to play with, because with the unemployment rate, it means more people are going into social grants, you know, and maybe, and I don't know, those people are not earning enough or are not being given enough as it is, so, you know, suggesting that cut it, you know, but those are unfortunately the evils, you know, that we're actually confronting in terms of the choices that we have, you know, and I think we knew, you know, coming up with this out of the state capture project, that we're not going to have an easy time. We are going to have to make tough decisions, right? And if we don't make them, then unfortunately the IMF is going to walk in and make them for us. So I think we're better, you know, start, you know, swallowing the bitter pill ourselves.
But I was reading a good article that they were saying that if things don't go well, we're going to go cap in hand to the IMF, and they're going to tell us to do what we should have done in the first place.
Absolutely.
But some of the cutting of the frills and stuff, I mean, surely that's an easy win for Mboweni. I mean, I heard from one of the ministers in this very studio saying, oh no more business class travel all over the continent. I mean, who really does that anymore, you know? Anyway, but secondly, they were saying, no, there's going to be cut back on expenses, going to be cut back on all these little frills and things that the politicians get, and even a cut back on the ministries, which I think could go a lot further than it's gone.
So it has, but I don't think it has gone nearly far enough. There's a lot of ministries that can be collapsed without starting to touch the salaries of those people that do not really earn that much. I mean, the teachers and the policemen and people like that. You could arrest the growth of the salary bill by not just adding the fringe benefit stuff that you get, people that are kind of help us in the ministry that are not core to delivering, to turning the country around. My worry about the salary bill of government and what the minister is going to say is he going to tell us what meaningful cuts he's going to make on the spending? Because if you move part of the debt for Eskom to the government balance sheet, the other thing that it does, that the interest you pay, besides you going to junk status and so forth, the interest you pay, I think, tends to crowd out what you could spend on these other things that are needed, the infrastructure spend, propping up the hospitals, the road infrastructure, things that make it easy for business to come to South Africa, to work in South Africa, to grow the economy. You tend to crowd that out because you are spending on paying back debt that we haven't seen what that debt did for the economy in terms of making us an economy that can compete in terms of providing constant energy supply. And that plus the other expenditures that the government does that people have come to rely on is my worry that I don't think we are going to move towards creating an environment where business can thrive. And if you don't have that, and if you have business confidence where it is right now, I think it's going to be a huge a tightrope for the minister to walk, satisfy the people who have come to expect government to subsidize how we live, but also satisfy the other requirements that are going to say cut expenditures without necessarily going to increase tax, which they can't, I don't think, by much. I mean, they won't do it now, but for the next 3 years, what is his plan for the tax revenue?
But it must be a heck of a job. I mean, that he said, with the size of the civil service, we're talking about tens of thousands of people. And let me be honest, and I'll say it on record now, every time I go to Home Affairs, I feel sorry for the guys who work there. You can tell they're harassed, they're overworked, and their salaries, I'm sure, are not the highest. How do you actually say, okay, we're going to cut 10,000 people or 5,000 people? What happens to services that people need? Yeah. You know, I mean, what do you think he's going to do there? You
know, and I think probably maybe this is where, you know, where some of these, and I think the Department of Home Affairs and all of that, but this is where for me there lies a silver lining in as far as the SOEs are concerned, you know. Bring in people who have got deeper pockets, who can actually put equity into these organizations, you know, so that therefore we can be relieved from a fiscal perspective, you know, as a government. And I think the notion that as soon as you cut 15,000 people from Eskom, you know, and therefore allow efficiencies and allow competition to come in, you know, yes, in the short term, these people might be unemployed, but as soon as you know, deal with the monopoly status of Eskom, you're therefore bringing other players, and who best to employ as a player coming into a South African market in electricity generation rather than Eskom employers. So in the short term, yes, it is. But in the short term, we also know that we have to take pain. So let's not pretend as if we don't know that. You see, you can't siphon so much money out of the country over the past 10 years and think that it's going to be business as usual. It can't be business as usual. So we're going to have to define for ourselves what business unusual means, because whether we like it or not, as I said earlier on, it's going to be defined for us. So I think let's bring it and cut loose some of these SOEs. You don't need an SAA. It's not strategic. If it had to stop operating tomorrow, the economy still continues. But unfortunately, we don't have the same latitude as Eskom. That's why the decisions are going to have to be very clear in terms of what you do with Eskom, because if this thing collapses, it collapses the entire 5 trillion rand economy with it. And I think those are the, issues that we're going to have to look at. So the SOEs, for me, are really a silver lining. Bring in strategic good partners, bring in investors, open the structure of the economy so that you're not sitting with oligopolies. You're actually making it easy for other entrants to actually enter some of these industries, so that then competition can be heightened. And by competition being heightened, therefore, you get people can actually be absorbed into jobs, and actually, you get efficiencies out of everyone, because our system is very inefficient as it stands.
And that's another case in point here. I mean, everyone's been talking about Cyril Ramaphosa's reforms for the last couple of years. A lot of people saying to me in the business world, saying, no, it's not fast enough, it's not enough, it's not radical enough. Do you think Tito might give us a signal that things might start speeding up a bit in this medium-term budget?
I think that's the expectation or the hope, perhaps you might rather say, of markets. I think markets have learned to be disappointed. But the point really is that, in the absence of stronger economic growth, we're not going to get ourselves out of the fiscal hole that we're in. And that's the bottom line. And, having political infighting and political opposition to the growth plan from the Treasury. But the point really is that having opposition to it is problematic, because it's not a very radical growth plan. It actually brings us in lines with other economies globally who are running at good economic growth rates. Either we want good economic growth rates, we want employment, we want to repair our fiscal problems and our SOE problems, or we don't want to do that. And if we don't want better economic growth, if we don't want employment, then we must carry on not supporting Tito Mboweni's growth plan, because it's not a radical plan. It's a very normal plan that other countries globally would follow and are following to uplift the citizens of their countries and improve their living standards. And we are not improving the living standards of the majority of people in South Africa by continuing to have opposition to such a very neutral economic growth plan. It's not even a radical one.
Tendani, I've got to ask you, I mean, if you were an advisor to Tito Mboweni, which I know you're not, what would you be advising him, saying, okay, here's some quick wins we could have that would ease the tension in the markets, would convince the business community we're on the right track? What would you be advising for this?
I would say give legs to the policy reforms that the president has mentioned, give legs to the paper that he issued a couple of months ago. I would also say, remember, we are missing out on what the IMF said the emerging market growth rate is. It's way above the 0.7 that they forecast for South Africa for this year. I'd say we are running out of road. You must have a turnaround plan for SOE that is supported by the numbers. I agree with what Busi said earlier. Also, can we have some clarity on Eskom?
Well, and this roadmap that was put out this week, was that enough clarity for you think?
No, I mean, there are no numbers behind that and how he's going to appropriate funds to finance that, what he's going to do once it moves to, if it does move to the balance sheet of the government. So for me, that is not nearly enough. But giving legs to the policy reforms with numbers behind it is what I would expect from him.
But Busi, I mean, that's one of the great complaints that I get all the time. I mean, in this studio in particular, people saying, look, okay, there's too much political noise, there's too much talk, there's too many plans, there's too many initiatives. I mean, even in small things, I was just thinking the other day, I remember us doing a story a couple of years back about how 15,000 young artisans are going to be trained to fix the water leaks, to ease the water problem that we're suffering in this country. And we checked back recently, nothing, not one.
Yeah,
what is that?
Absolutely, I mean, yeah, exactly. Over the weekend I was at this conference where this guy from S&P was actually saying that, we are not impressed by all these committees and councils and commissions and whatever the case is that you keep on, because actually for me, and I think for on a personal level, but from a constituency level as well, you know, it screams confusion. You know, once you put, I mean, look at the ESCOM board, for instance. You've got the ESCOM board, you've got the technical review committee that reports to PG, you've got the presidential task team that reports to CR, you've got the CRO that reports to the finance minister, you've got the interministerial team that reports to DD, you've got the, so actually funders and investors are saying who's who in the zoo, who do we finally hold accountable. So these committees therefore scream, you know, confusion. They say you don't know what you're doing. They say you don't have a plan and you don't have your arms around the problems. Because I think we're going to have to understand in terms of where we are not going to please everyone. So bringing in committee after committee after committee to actually ensure that all the stakeholders or all the constituencies are actually happy, it is not if you try to please everyone, then you are not making enough progress. Let's have a serious conversation with Labour to say that Labour, you cannot continue demanding 11% increases, you know, when the economic growth has not touched 2%, you know, since 2013. You know, let's have a conversation, you know, with the civil society grouping, you know, and in terms of what the new social contracting is going to have to be in as far as that is concerned. You know, government as well are going to have to understand that, you know, government is not an employment creation scheme for the ANC. You know, you get the right person for the job. You get the person who can best move and advance this economy and deliver for the 59 million South Africans, you know, and they're really going to have to, so those are all the, you know, on a broader level, because if you keep on bringing these people that were implicated in the state capture project, you know, it therefore says to the international community, and we are talking about growth. Growth is going to come, or is going to actually follow investment. You need investment first so that people can get into jobs, and once people get into jobs, it therefore, you know, sets off the economic cycle and the economic stimulation that you actually need. But without investment, then we're not going to get this growth. So we're probably going to have to say, therefore, what is the problem statement? What are we trying to solve for? And we know that it is low growth. What are the key drivers of this low growth? You know, and you actually therefore are going to have to, you know, say that we need to position ourselves as an investment destination. What does positioning yourself as an investment destination mean? What do the funders want to see? What do the investors want to see? And you therefore start implementing those things. You know, it would be great as well to see one or two of these people, politicians in the main, and some of the business people that are actually going to be hauled to jail in orange overalls, because that starts to say you are serious about ensuring that corruption. Because a lot of the questions that international investors are asking are saying that, how do you, you know, ensure, you know, how do you experience so much corruption and no one is actually, you know, in courts at the moment, you know, talking that case. So these are all the things that we're actually going to have to get moving.